try this again. It's a beautiful day outside, 70 degrees, a lot less hot than yesterday, but we got a lot to talk about, especially when it comes to RV loans. And I've got a little bit of Brinkley gossip on top of some other things. So let's get right into it. Welcome to HB RV Lifestyle, the podcast. I'm the host, the Honey Badger, here to give it to you straight and transparent about the RV business, as well as other things. So, we're starting to see a interesting turn of events when it comes to the RV loan and financing part of the business. Years ago, we used to have what they call a VIB program. Bank of the West had basically an auto approval program where we ran your credit one time. We took that credit application, the credit report, we stapled it together with all the loan paperwork and loan documentation, and we sent it in. And there was a guideline on what the interest rate was based on your down payment. And it was 99.999999% accurate. When I was doing that program, out of 700, 800 loan applications we would send out per year, one or two may come back. Well, that program was eliminated during COVID. And now it seems that those type of programs are starting to make a comeback in the industry, but it's going to start requiring actual skin in the game. Okay, so I was talking to a couple people I know on the banking side of the industry. There are two prime lenders that are going to come into the marketplace. Can't name names because of all the stock speculation stuff, and you know, I basically have been told I can't name the names of the banks. That I have to wait till they're publicly announced before I can talk about the names of them. But there are two lenders that are considered prime lenders that are going to come into the RV market for the first time or make a return into the RV market. And they're going to come, in with an auto approval program similar to what Bank of the West had before they were bought out by BMO and before COVID. And very similar to what M&T Bank had until they canceled theirs, and very similar to what Ally Financial had back in the day. But the difference is now is you used to be able to do some of the programs with zero down. Hello, everybody. So you used to be able to do these programs with zero down, 5% down, $500 down, if the amount financed was under 50 grand, and in some cases, if the amount was under $75,000. So basically what would happen is if somebody wanted to buy, let's say a 26 foot or 28 foot fifth wheel, and they want to put $750 down on a $40,000 purchase, we can make that happen if they were over, let's say, a 750 FICO score, and they had a certain history, certain amount of time on the bureau, certain amount of trade lines, staple that stuff together, send it off to the bank, and get the lending. Now, from what I'm being explained, is these new lenders are going to start to require actual skin in the game to get that auto approval. And what I mean by skin in the game is not 10% down. What we're talking about is probably closer to, let's say 15 to 20% down. So they want you to actually have, not just cover tax and license, but actually have equity in the loan before you drive it off the curb. Now, while it depreciates when you first drive it off the curb, if you've put down, let's say 5 or 8 or 9 or 10% towards the actual principal of the vehicle, not tax and license, then obviously it would make the loan look really strong. And that way they can avoid proof of income, avoid proof of residence, just boom, staple, and off it goes. Now, why that's beneficial and why, I'm going to put this down here for a second, and why that will help in the long term for both consumers and dealers and manufacturers is now we can run your credit one time, staple the paperwork, and off it goes, instead of having to run it through 3 or 4 banks to get the loan. Now, we'll still do that if you're going to fight the interest rate, because the interest rate on these programs are going to be higher than if we did, let's say, a submittal over to US Bank or Huntington or Bank of BMO or Truist or M&T, etc. So it's going to be a little bit higher interest rate if it's going to be an automatic approval through one of these programs. Now, why would this program be beneficial to consumers and dealers? Well, let's just say you are a 720 FICO score. Let's say you got a little bit of a heavy credit card debt. You've taken out a lot of loans. You're pretty in debt. When you send that stuff over to a bank or credit union, generally they would automatically turn you down for an RV loan. Well, if you're a 720 and you have one of these programs and you don't have a bankruptcy, you don't have any repossessions, anything of that nature, maybe a couple late payments, maybe you're overextended on your credit cards, we can still do the loan. Now, it won't be for 100 grand or 200 grand. It'd probably be around 45 or 50 grand. It would have to be somewhat a newer unit or a brand new unit, but we could get it done. So that's the benefit. It would be a lower interest rate than what we would get through a subprime lender, but it would be higher than a prime lender. But at the same time, you would at least have the loan and have the coach that fits within your payment budget, as well as your price budget. Now, what most people don't realize is price and payment coordinate. Yes, they correlate and they coordinate. And what I mean by that is, what most people don't realize, I always try to explain this to people in person a very blunt and brutal way. When people tell me, oh, we're looking for a $40,000 motorhome. Okay, cash or financing? We don't know yet. I usually just say, goodbye. Don't want to deal with you. And the reason why I say that is because in this industry, it's complicated. If you're paying cash, actual pure cash, I'm not going to worry about payment. I'm not going to worry about anything else. I'm going to go show you the cheapest stuff I have on the lot and work my way up to 40 grand. Okay. If you tell me you're financing, the very next thing I'm going to ask is, what kind of payment are you looking for? And here's a reason why I'm saying this, okay? And this is where people have to have an understanding this is different than a car. When you got a car guy on YouTube and Facebook, the Chevy guy, great guy, I like him, I follow him, and he tells you, don't ever tell a salesperson a payment in a car, I agree with him. But when it comes to an RV, it's a different animal. Completely different beast. You need to be upfront about what your payment is. I'll give you an example. Best example I could give you. Had a customer walk in about a month ago. Great couple, had 2 small little kids. They said they had a $35,000 budget. Cash or finance. They said, well, we're probably going to put $5 grand down and finance the rest. Great. What kind of payment are you looking for? And the first thing they said is, well, that really doesn't matter to us. Okay, great. So if I found you a coach that's $35,000 and the payment's $1,000 a month, you're good with that? Well, no. Okay. What kind of payment would you be looking for? And the guy said, the wife spoke up and said around $200 a month. I said, great. Your budget's not $35,000. Your budget's closer to $22,000, maybe $24,000. And they looked at me and I said, let me go show you what you can buy for $200 a month with $5 grand down. That's going to be between 20 and 20, or I said 22, 24,000. And we found him a coach, and they liked it. They came to it. I showed them how it works. They went, wow, we didn't know that. We thought you could get 20 and 30-year financing on any RV. And I'm like, no, that's not the way it works. You know, the certain dollar amounts, you can only go a max term of, let's say, 10 or 12 years. So we found them a unit, payments $210 a month, $5,000 down. They love it. It's a little used, but it works for them, right? And then I've had guys who come up to me and have told me, no, I had a guy the other day, $26,000 motorhome, max budget $250 a month, $6,000 down. He's spot on. Perfect. Let's go. I don't have anything for that price range. Not a big deal. Not going to waste your time. You're not going to waste my time. We're going to make it happen for you. We're going to make you feel like, you know, if you want to go look around, just look at floor plans, go for it. Yes and no. I do a lot of different jobs, actually. I do service, I do walkthroughs, I do sell them, I do some of the lending. Mostly what I do is a lot of marketing and social media stuff anymore, but I used to sell them. Like for 10 years, I was nothing but a salesperson. So the reality is that you need to be upfront about what you're working with. The most upfront people in the world are people with bad credit. They're the folks that are... Motorcycles are a different animal, okay? Motorcycles are financed differently than RVs, higher payment. Most people are more price conscious. Price and payment are different in the RV industry, just because the terms, and there's so much bad information on the internet that it makes it really hard to actually get real, actual, accurate information about how RV loans work. That's probably why my channel grew so fast. My main channel and this podcast have grown so quickly over the last 2 years, is because I give you the actual real information, unlike all the con artists in the world that are just looking for clicks and views. Now, I'm looking for clicks and views and money too. I'm not doing this for free, not by any means. I'm getting ad revenue when somebody watches this stuff, but bikes may be cheaper, but the financing shorter term, higher interest rate. It also does finance differently. Cars are financed differently than RVs. Motorcycles are financed different than cars and RVs. Boats are similar to RVs. This is why just go in and tell them how much of a price you want to do. Just ask them what the best price is. I'm only interested in what the best price you can do for me. That stuff doesn't help you in the RV world. It may be a great car tactic, not so much in the RV industry. Okay? Not so much in a lot of industries. So getting back to it, down payment is becoming more important, especially when you have good credit. Now, what I'm noticing is, I was talking to a customer the other day. They're asking me, well, how much of a down payment do I need? At this dollar amount, if you have strong enough credit, you don't need any down. But the payment's going to be probably a little bit higher than what you would want. So the question is, would you rather pay now, or would you rather make the down payment and payments in your payment? I don't know. I've never done motorcycle financing. I've only done RV and boat financing, and I've done a couple cars here and there. So I don't know. But good question. I'm the wrong guy to ask that question to. The reality is, interest rates are really starting to go up for people that don't have a lot of down payment. We're starting to see a massive swing. So here's an example. We did a 0 down loan with an 840 FICO score, and their rate was 9.5. We did a 758 FICO score that was putting 15% down, and we got them a 775 rate. So down payment is becoming more important to get a good interest rate on a motorhome or a fifth wheel or a toy hauler or a travel trailer, etc. So it's that balancing act between the amount financed and the percentage down payment. So the other day, a guy was telling me, well, I'll just go to my credit union and get a loan. Went to his credit union and his interest rate was 0.5 point higher. So right now, dealer financing in the RV industry is lower than your personal credit union. Now, that'll flip-flop. That always changes. Okay? It's like a seesaw. Now, but for the last 2 years and into this year, your credit union is not going to do as good of a loan as the dealership is. But that's why I always tell people, if you're borderline, let's say you're a 650, 660, 670 FICO score, and you've got your credit union, still go get pre-approved with your credit union and then let the dealer work from there. That way you have a backup, okay? Give you a great idea how much that really works. So the other day, I got a call from a friend of mine. He's actually runs a dealership in Colorado, was stuck, had a really hard time trying to find this guy a loan. 664 score, but like always on time with payments, never late, just carries a lot of heavy credit card debt because he's self-employed. He couldn't get him done anywhere. Just the banks felt like there's just too much credit card debt. Okay. He sent me his credit report. I looked at the credit report, noticed he was part of a credit union called Essex. Okay. And I'm like, has he gotten pre-approved through his own credit union? So I looked it up. Yeah, his credit union does RV loans. They only do 7-year loans, probably around 12%. I'm like, send him there and at least get the pre-approval letter, and then we'll work it backward with the other banks. They approved him. He used the approval letter and actually got another one of his lenders to pick up the loan at a little bit better interest rate and a longer term. So sometimes that helps if your credit is borderline. The advice I would have, do you live in the United States, Adrian, or do you live in a foreign country? Because that's a great question. Sorry if there's a little pause. We're waiting for Adrian to Russia. So if you're in Russia, I would probably borrow the money from your parents and pay them back on the loan. If you were living here in the United States, I would tell you take the loan through the bank or the lenders, because you got to build credit history in this industry or in this country. I don't know how Russia's credit system works, so you have to forgive me, but I know like a lot of my friends are from foreign countries like Turkey, India, Australia, places like that. It's always better to borrow from your parents because the lenders lend on things differently and they look at different criteria than they do in the United States. The United States is all like a scoring system and computerized. So you really have to like build your credit and rebuild your credit as you go along. If it works the same as here and it's like a credit rating, I would take a loan from a bank that through the dealership, or if it's private party, go through your own bank or sign up with your own lender and get the loan, because that way it shows up on your credit history. You might pay more interest, but you start to build a credit history. You start to, and if you already have good credit, it keeps your good credit in good standing and keeps it active. So if it works, if Russia works identically to the United States, I would definitely 100%, even if the interest rate is higher, I would still get the loan through the lender, so that way it reports on your credit bureau. That's what I would do. The only time I would borrow money from like a family member is if it was something I was planning on paying back in like 30 days. So hopefully that was helpful. All right. Now, I have some gossip about Brinkley RV. This got a little tense last night. So last night, picked up a friend from work. I gave a friend a new friend of mine a ride home from work last night. And after I dropped them off at their house, I continued to Uber for like 2 or 3 hours, got in around midnight, 1 o'clock. About 1:30, I get a phone call. It was East Coast time, so obviously 4:30 in the morning. You're welcome, Adrian. And it was from an unexpected person. I did not expect this person to ever contact me ever in my life. And it was an interesting conversation about Brinkley RV and some of the conversations that this person has overheard and has kind of been a part of in the dealer community. Okay. So